share the screen. All right. Okay. Yep. Okay, so this is the story of ANTA and Ning. Let's get on to it. So today we're going to be discussing a few things. Just in general, the Chinese sportswear industry, has it come from? Where is it going? Then we're looking into Ning and ANTA in particular, looking not just at their financials, but also their valuation as well, right? I'll run through their discounted cash flow model and also looking at their past price to earnings ratio, and if these two companies give us some dividends as well. And lastly, then we'll have our usual spin-off segment, and is another book introduction, and there's going to be a special giveaway as well for this Chinese New Year period on that book. And lastly, I just hope that we have done 3 webinars up to date, and I hope that you can give me some feedback on how am I doing, and I love to understand a little bit more of what are the things in particular that you want to hear more about. What are the things in particular that maybe is not that relevant to you, or maybe even the timing of when we are having this webinar, when would be a better timing for you. And these are some of the things that I love to hear from you and see how I can improve on. Okay. Oops. So the players in the Chinese sportswear industry right now, more or less, they're dominated by 5 to 6 players. And in particular, these are the brands, right? The main one is still Nike, which has the market lead in China. Previously, they were mostly dominated by Nike and Adidas as the premium and more well-known brand. But over the last decade, the local brands, ANTA, Ning in particular, has grown hugely in market share. The third player is Xtep. They are more or less around 8 to 9% of the market share in China. And there's another player, which is Fila. And Fila China is actually a subsidiary of ANTA. ANTA has bought over the entire brand for China market in particular only, including Greater China, which is Hong Kong and Macau. So ANTA owned the brand outright, including the design right, manufacturing right, and everything. So in Fila in China is actually managed by ANTA. So they have these 2 brands. One is the more premium brand under Fila, and one is the more mass market brand in ANTA. Whereas Ning, on the other case, they run a single brand strategy with just Ning, and they position themselves as a slightly above market brand. So they're competing directly with Nike and Adidas. So these are the personnel involved. The founder of ANTA, which is Ding Shizhong, and also of Ning. Not surprisingly, his name is Ning, right? So, but they both come from very, very different background. So for Ding Shizhong, he is actually a born businessman. Maybe you can say that, right? His route is, since he was young, just in his teens, he has started working, firstly with his father, who was also a small boutique shoe manufacturer. And then later on, he went on to work for many other sportswear companies around, and he learned his industry around shoes. So he has always understand the business side of shoes. And by 1994, he and his brother, Ding Shijia, both of them co-founded ANTA Sports, and they started their own brand. The company grew quite significantly until 2007, where ANTA was listed on the Hong Kong Stock Exchange. And after that came the most significant incident or a pivot point for the Chinese sports industry, which is the 2008 China Olympics. And that Olympics created a huge sporting craze in China, right? After that, all the entire Chinese sporting industry exploded. And when that happened, it leads to all the players started massively expanding. So after 08 to about 2010, every single Chinese brand was expanding exponentially and building supply and building inventory, building out their distribution network. Was huge growth during that time, but it also leads to one problem, which is overcapacity. So by 2011, the entire industry was just completely flooded with sportswear and shoes in particular. I remember at the time, they were very common to have like a 1-for-1 a discount. So you buy one shoe, you can either get one more for free, or they're going to donate one shoe to the less fortunate in China. So the inventory was so huge that it became a problem. And that particular problem was not really detected very early on if you have invested in ANTA or Ning at that time, mainly because all these companies at the time, they were using wholesaling model. So they're selling to distributor or third-party retailer. And what they're doing is they're forcing all these retailer and distributor to buy more and more of their inventory as they're producing it, regardless of whether these retailers can sell them or not. So on ANTA's financials or Ning financial during that time, you wouldn't be able to see that there is a problem, right? Their inventory turnover was still okay. They're still increasing revenue because they are selling more shoe to distributor. But on the distributor side, everybody was stuck with obsolete inventory. And then came the point where there was a crisis during that time. I'll speak a little bit more about what happened during that time later on. But so Ding Shizhong, he has created ANTA throughout all this period. Right? He built it from nothing. Has experienced a few crises, especially the one in 2011, and now has brought ANTA to a whole new level. Ning, on the other side, he is not a born businessman. He's actually a full-on athlete. So he's trained as a gymnast since young, and by I think early 20s, he was finally selected to be the China Olympic team. And one of the first time that China entered Olympics, he was the first person that obtained gold for China. And throughout their history, he is the most decorated gymnast of all time. So he joined the, I think, 1980 Olympics, 1984 Olympics, and then 1988 Olympics as well. But during 1988 Olympics, he was faced, he joined it while he was injured. So that's why he was unable to compete successfully during the 1988 Olympic. And right after that, he decided to retire from the sports. And within 2 years, in 1990, he started the brand Ning. And so you can see Ning has quite a long history, even until today, more than 30 plus years of history for the Ning, and also close to 30 years for ANTA. So these are two key veterans in the industry, and I wouldn't say that they are, new startup founder that don't know anything or are copycats of Nike and Adidas. That might be true, 20 years ago, but no longer. They are truly quite innovative in their own design, and they are breaking new grounds in the sportswear industry. So this was the time frame that I was talking about just now, when after the 2008 Olympics created a boom for the China sports market. You can see their growth was very, very high. But like all things in China, the huge boom led to a bust, and everyone was expanding exponentially, and then it leads to oversupply and high inventory at the place, massive closure, and a rebalancing of how the industry works. And that took about also 3 to 5 years before they can finally start growing again. And in the last few periods, it actually created much more innovation and research and development going on into the industry, allowing the whole industry to really compete on both the quality and also the innovation in sportswear and sports shoes in particular. And ANTA in particular, over the past few years, especially start of pandemic, they are diversifying into different sports segment as well. Winter sports is one, and through their few acquisition, I'll discuss later, and how they are able to create a multi-brand and focusing on different sports throughout China, and that has allowed them to continue their growth till so far. Okay, this is the current market share of sportswear in China, and you can see that over the past few years, brand N, of course, is Nike, brand A is Adidas, and the China brands, previously from sub 10, they have all been increasing their market share, while the two international brand has been losing ground. That is also a result, in particular, with the Xinjiang cotton incident a few years ago, where both international brands and the Western world in particular was condemning what's happening in Xinjiang and boycotting using cotton coming out from Xinjiang. And that has a opposite effect for Chinese consumer. They become more nationalistic and wanted to support local brands, and decided, that started their whole trend of what they call guo chao, which is supporting local brands. And that has continued still, and I don't think that will stop anytime soon, and especially with the more trade tension between the Western world and China is actually increasing in tension rather than diffusing. And I think that will lead to more nationalistic fever among the Chinese consumer as well. Plus, the product itself is starting to be competitive to international brands as well, right? And so it become more of an appeal for Chinese consumer to buy their local brands. Oops. Okay, sorry, I got lost out. Okay. Ooh. Give me a minute. Can't seem to change to the next page. Oops. Give me a minute. So sorry. I am unable to share screen. Okay. Ooh. It's not looking good. Okay. Yep. Let me try that again. Okay. So these are some of the things that is happening. And one thing why I like about this industry is that it has the support of the Chinese government. So in the Chinese business world, it's very, very hard for any industry to succeed without the support of the government, right? We learned that even the tech industry end up having to adhere to the government policy, and the government policy can kill off an entire industry overnight, which is what happened to the online learning industry in China. It was one of the biggest industry in China, and it basically got killed off by the government within months. So good thing is sports is something that the government is very, very focused on and want to put emphasis on, and they want to become a sporting nation, right? It is put under their 10-year plan, 5-year plan, 20-year plan. And these are some of the requirements or focus that the government wanted to look into to grow their sports industry, to have a better contribution of sports to GDP, and raising sports consumption in the in among their citizens as well. Some of the targets they have already reached, right? You're talking about like sporting population of 435 million. That's maybe 1 in 3 people in China do some sports, according to their latest statistics that is have been achieved. Interesting is which are the sports that they want to be prioritizing and targeting. A lot of ball sports, and of course their traditional Chinese focus sports, like your racket sports, they are also very big on. So when it comes to ANTA and Ning, what is the key difference between these two companies? Well, after the oversupply that has happened in 2011 onwards, both companies sort of diverge slightly in their approach. ANTA in particular go into a multi-brand approach where they acquired Fila China and rebuilt the business, because Fila China previously was under another Hong Kong company called Bell International, and it was loss making. They were unable to make it profitable. And after ANTA took it over, and today Fila is one of the biggest sports brand in China right now. So they're able to revamp that with two strategy. In particular, right now for ANTA, about close to half of their revenue coming from ANTA, and then another 40+% of their revenue actually coming from Fila. So consider, it's two key brands running in the company with other small brands. And previously they were mainly a wholesaler, but right now they are actually moving more and more towards direct to consumer. So either through their own stores or through e-commerce as well. So I think in Fila in particular, they have no distributor at all. So they're selling Fila brands directly to consumer all by themselves, while ANTA still have some distributor. Ning, on the other hand, is a single brand. So there's only Ning, and they position themselves as a slightly premium brand, competing directly with Nike and Adidas. Also, they switched to more direct sales method, so to be able to control the inventory much better. And I think that, when we look through their annual report right now, both ANTA and Ning, they put a lot of focus on inventory. How old is the inventory? What's their sell-through rate? What's their account payables and their cash conversion cycle? So I would say operationally, both companies are in a much better place right now, and very, very well run. And they definitely learn from their mistake. But the key difference between the two is one going for multi-brand strategy, one going for single brand strategy. And what are their segment of business? So right now, is mainly between shoes and apparel. So a predominant part, about 30-40%, is coming from shoes, another 30-40% is coming from apparel and sportswear, and the others coming from other things like accessories or sports equipment. So that's their key focus, and I don't think that will change anytime soon. And of course, the addressable market, both is still very focused in China, but if you look around our malls right now in Southeast Asia, I think more and more we are able to see both ANTA and Ning coming to this to this area as well, to this market. But of course, the size of what we can give them would be so much smaller than what they are experiencing in China. So maybe, in my opinion, they're more or less just using Southeast Asia as a test bed to see how they should work out their international strategy and how it works. And once they find a model that works for the international market, maybe they can expand it to a much bigger, wider market across the world. And main sports, you can see that they are mainly still focusing on just a few key sports, which is basketball is one of the biggest sports in China that they are focused on, running as well, and racket sports. Ning in particular, ANTA in particular, has been moving more and more into winter sports as well, with a few acquisition that is winter sports focus. Okay, so what are the macro trends? And overall, I think both companies, I like them, and I think they have good long-term global trend in their favor. First one, of course, is the China policy and the turn towards consumer of more supporting locals, and also their strategy of expanding overseas from China, expanding to other sports like winter sports, and of course, their kids segment, right? Both Ning and ANTA has ANTA Kids and also Ning Kids. And as the wealth of China grow, I think the spending ability and the willingness to spend more for high quality and good looking sportswear for the children would also increase. So these are some of the good macro trend, I think, facing the two companies, and not changing anytime soon, I feel. I did a quick swap analysis on the two companies because they're quite similar overall. More of my thesis for them is more of a top-down approach. So I like the industry, and I think both companies will do pretty well in normal circumstances. And their strength is, of course, the Guochao trend, which is Chinese consumer buying more China products. The government policies is favoring them. They are both actually more and more innovative. ANTA has a sports research lab right now, which look into sports technology, and they will slowly they are implementing all this into their sportswear and shoes as well. So they are getting more and more innovative. Ning, on the other hand, has put a lot of bold design into their sportswear as well. So both innovative in terms of tech, also in terms of new design. And plus, both company is in a net cash position. No problem at all in their financials. It's a cash generative business. Plus, they are already in that cash position. So a pretty good place for them to be in. A weakness is maybe there's still a branding lack, I think, for China brands compared to the international brands. If it comes to a point where they are both similarly priced, I think most people will still end up choosing the international brands. The main reason why they will still go for ANTA or Ning, apart from Nike, Adidas, there must still be a pricing gap because the branding is still not as strong. Maybe that will change in the future, but I think it will take quite a long time in building up that brand. And it will actually cost a lot of money because sports branding requires a lot of sponsorship to athletes. So they need to spend a lot of money sponsoring athletes. Just think of the amount of money Nike spend sponsoring athletes around the world. It's a huge marketing cost for them. And if ANTA or Ning want to reach that level, their marketing costs need to go up very, very significantly. And then they're very, very strong in China. So when at the time, if they want to expand outside of China into the global market, yet to be seen how well their global supply chain is going to be, and if they're going to make it, they're able to compete with the scale and network that Nike and Adidas have internationally. So that's something to look into. And just now, like I said, sponsoring athletes, not just athletes. Maybe now, just sponsoring influencers, internationally. And if they go into this space, then they have to start competing with the marketing dollar of Nike and Adidas around, right? We've seen how Adidas collaborate with Kanye West, and that basically rejuvenated Adidas brand in the US, by just partnering with one person, one key influencer. So, but it also cost them a lot of money to do that, and the artists have to be willing to work with them in the first place. And so these are some of the obstacles that ANTA Ning will face if they try to go big in the international market. Some weakness also corporate governance. A few issues I want to bring up is sometimes the management of both companies have done it. They might do things that to outside shareholder, like an investor like ourselves, it doesn't make much sense, and they don't explain it so much. So for one, over the last few years, although they are already in net cash position and they are quite strong, and the business is growing and is generating cash for them, both companies actually went out to raise equity. And ANTA, I think, raised about 11 billion renminbi. Ning also raised about 2 or 3 billion renminbi. And so that's a confusing. Why at the time where you don't need the cash, you're raising money through equity when you're still in net debt, to dilute shareholders? That's something that they didn't explain. And then Ning, on the other hand, went on further by end up purchasing a HQ in Hong Kong, a building in Hong Kong, to make it their Hong Kong HQ. And that is also a confusing move, right? Because if you need to expand overseas or have a HQ in Hong Kong, you don't need to spend billions of dollars just to buy a building. And again, there's not much explanation on that part. So these are some questionable moves by management, but both companies is still under their control and under their ownership mainly. So it's hard for us, for minorities investor, to go against that, or but these are just some of the things that maybe you have to think about. Corporate governance side, maybe not as strong or shareholder friendly as some of the international brands. Some threats, a big threat, I think, is going to be the China economy and how it will perform in the next few years. There's a real threat here. Both companies, you will see that later, especially for Ning, but the valuation is not that high. But there is some real risks here, which is the Chinese economy could face a big major crash if they are not managed properly. And that stems from the property sector in China. It's quite a big issue right now. And many of the properties, investors or buyers are facing a lot of problems. Some of their properties are completely underwater, so their mortgages is actually more than their properties. And of course, we've seen collapse of developers, major developers. It has a cascade to a lot of the investment company as well. Those shadow banking investment company that supply the capital to the property boom, some of them has declared bankrupt and is in the process of liquidation or restructuring. All this is happening in China, and the property sector is a huge sector for China, and the banks are linked to the property sector. So if all this cascade down to the banks itself, then we'll have a 2008 issue that's happening in China, right? This is almost a mirror image of subprime crisis happening in China. So it depends how the Chinese government can handle it, can stamp the major crash, or give back confidence to investors. Right now, almost the foreign investors have all lost confidence. Basically, I think after the the tension between US and China increases so much, most of the foreign international investors have left China, right? Predominantly, which is why we see the Chinese market is has been struggling for so many years in the past few years. But now there is a chance that even the local investors are worried and might induce a big crash in China. So this is something to bear in mind. Nothing to do with how the company is operating or the long-term trend, but if the economy of China is facing a crash, I think it will affect every company in China, regardless of how well their balance sheet is. So that's something to take note of. I'll share a little bit on how I think I will be investing in these two companies, how to minimize the risk that we have to take. Next one is of course opportunity, and this happens in particular to ANTA, which is moving to other sports, moving more to lifestyle fashion, and also their M&A, buying other companies. Next section is talking about the mode rating. We do this for every companies, which is looking at, does this company has any economic mode? Some of the things we look at, of course, is the economic scale. Does it have scale? Does it have branding? Does it has a network effect, special IP, high startup costs, the control over resources or switching costs, and that, does it have any of that to help maintain its high margin or prevent new competitors from coming in? I think these two companies actually has some, right? Not a lot, but they do have a little bit, and predominantly coming from their branding in China, right? At least in China, they are quite well-known brands. Plus their distribution network in China. They built up so many stores of their own stores around China. It's very hard for a newcomer to come in and compete with them. So this is some mode that they have built up for themselves. If a new player want to come into China market as a sporting brand, I think it's quite hard for them to compete at the scale and level at ANTA and Ning. Okay, so these are some of the key things that we talk about for ANTA and Ning. To summarize again, some of the risks we want to think about: competition. Nike and Adidas might not just sit there and see themselves losing market share in China. They might be coming back with a more aggressive strategy to compete again in China, right? China economy, we talked about that just now. And the policy right now is favorable to them. That might change, we never know. The raw material cost is something that they cannot control. But although it's not that big of a deal for them, given that their gross margin is at least around 50%. So they still can mitigate that. And then, of course, corporate governance for both company. Financials, I'll share their financials with you on a different slide through the Morningstar data later. But generally, both companies have very good operational metrics. All their ROI, their inventory turnover, all are pretty good, very standard and very impressive. Free cash flow is strong, high margin, very, very low debt. And if you add in the cash, it's actually a net cash position for both of them. And both have shown good growth and should continue to grow in the next at least 10 years. So this is ANTA. This is the half-year result. And you can see that even the last quarter, they have grew double-digit, about 14%. So this is their breakdown. You can see the ANTA is taking about 48% of their sales, and FILA about 40% of sales. So it's actually quite similar. And FILA, of course, is a much higher margin business. So when it comes to operating profit, maybe Fila is actually a bigger contributor for the company, Fila China. This is the operating margin. So you can see that Fila has an operating margin of 30%, while ANTA has an operating margin of 21%. These fluctuate a little bit, but more or less, this is their breakdown. And the good thing is almost all their brands are profitable, including their sub-brands are also profitable, which is good. This is for Ning. This is the Ning revenue. You can see that Ning is slightly half of ANTA in terms of revenue. But if you just compare the brand itself, this is Ning brand at 14 billion renminbi in half a year. And ANTA is also 14.17. So both are very, very they're quite similar in size in terms of the brand, but company itself, ANTA is slightly more than twice larger than Ning. Okay, let's go down to, let me see if I can change the screen to, okay, ANTA and Ning. I'll share with you the free cash flow model first. Let me see. Give me a minute. This is the free cash flow model. How do I expand it? Okay. Hope you guys can see it. If you can't see it, just click on the chat and let me know. And also, if you have any question along the way, feel free to click on the chat and write down your question. If you're using desktop, you can actually play around with some of the feature that Zoom have. One that I saw is quite interesting is actually notes. If you click on notes, you can actually create your own notes and you can share with our fellow participant here, to share what you have learned during this session, or what are some of the things that jump out to you. Okay, so let's run through both company. This is the discounted cash flow model. The template you can download. I'll share the link on my website later, and you can actually download this template and you can change around. So all this here you can change around to see if it suits you. So I put in their earnings before interest and tax going forward. Slightly lower, I think now last year they earned about 4 billion, right? Just on the conservative side, let's say we start at this number and I expect them to grow about 15% for the next 5 years first, which is also quite conservative. Over the past 6 years, they actually grow about 31%. But in the last quarter, they grew about 14%. So I just assume that this will be the growth going forward. And then after that, they have a stagnant growth of about 5% for the rest of their life. China tax is about 25%. The company has debt, but if you net out the cash, they actually has no debt. So for easy calculation, I just put that they have no debt. Cost of equity is something that I feel you can just treat this as your required return, right? So if I required 12% at least from a stock, then I put 12. If I only need 8%, then you can put 8 or 10. You can play around with that. Since there's no debt, this is not important. And the cost of capital, this tool is actually to use to decide how much money they need to reinvest. It's basically the ROE of the company, right? If they reinvest that money, how much can they generate from it? And if we see the operating performance, right now I say their ROE is around 25%, but you can see that the average 5 years, it's also about 26%. So more or less in line. And I assume that once they become stable growth, that ROE will drop to maybe just 15%. And this is the calculation from the model, and it comes up with the value of the company at about 38.7 billion renminbi. Just combine that, I put it at the end, just combining that with changing it to Hong Kong dollars and also adding in the extra net cash that they have, about 2-3 billion, I think, net cash that they have. And what I come up with is 49 billion Hong Kong dollars as a company, and their market share right now is about 50. It's about the same. So meaning that, at this level, if they're able to grow 15% over the next few years and a stagnant growth of 5% going forward, it should give me a 12% return every year. That's basically what it means. But of course, you can change around, and I would just pre-warn you that, valuation exercise is more theory than practical sometimes. So don't treat everything as gospel, and just use it as a guide, I would say. I did the same for ANTA. ANTA earnings before interest and tax, I put it as 10 billion, which is more around in line with what they have. Also, the growth rate, I put everything the same, and I come up with a value of 100 billion renminbi, including they have a 20 billion renminbi net cash right now in the company. So if I do, and I should change it to 22. Okay, if I add it as well, change it to Hong Kong dollars, the valuation of ANTA actually comes up to 134 billion Hong Kong dollars. But ANTA is actually slightly more highly valued compared to that. They are actually valued at 214 here. So you can say that ANTA is more overvalued compared to Ning, but again, I think that premium is deserving, mainly because they have multi-brands. I think they have shown that they can build up other brands on their example of Fila, and now they have a strategy of going out M&A. So with their good balance sheet, they can start buying other smaller sports companies around the world, can be international brands, and that could add to their potential. If we look at just PE alone, which is something that I think generally I would look more towards, this is the average 5-year PE of ANTA around 37. Right now it's trading about 22, which is slightly below. But I would say during this period, during the COVID period, their stock price shot up to a more unrealistic level. So if we cancel that, you can see that their average PE has always stayed around 20 plus. So now I would say it's a relatively fair value in terms of PE. And Li-Ning on the other case, they're only trading at 12 times. And if we take out the cash, maybe they're just trading about 10 times. Much lower than their history. And so Li-Ning is actually trading very, very cheaply right now, which is an interesting case study, which is why I put it as our stock of the month. So something for you guys to look into. Let me go back to, okay. Okay, so these are the things that we look at. Both have some dividend, but not a lot. Throughout their history, maybe 1 or 2% of dividend. That might increase as the company reach a saturation point. I think they will increase their dividend payout. So is these two companies for us? Some things I like, which is they have good long-term potential. The Chinese consumer story is still intact. The, the growth into supporting local is intact. Their products is becoming more competitive in terms of product quality and innovation. So all these are good things. And but do look at it only if you believe or you're a believer of the entire Chinese growth story. And right now it's quite hard to be a believer of the Chinese growth story, because China at the moment looks like it's heading towards what happened to Japan in 1990, right? Basically, if you read the history of Japan market, they also grew up in the 80s, from just being a copycat of all international brands, especially US brands. And then slowly they build up their quality and their innovation to such a point where they can compete directly with the US brands and the European brands. And then what happened is the US felt the threat and they clamped down on Japan, right? Putting a lot of trade tariff, saying that Japan has unfair trade practices, they are subsidizing their industry, and put a lot of bans, a lot of new tariff into exporting to the US, controlling their raw supply, and end up the Japan industry collapse. Not collapse, but reach a point of stagnation. The all the speculation, especially going into the Japanese property market, similar to what happened in China right now, basically lead to a complete crisis, and Japan has a, a has lost roughly about 2 decades. Right, for 2 decades, the stock market in Japan did not move at all. So that could become a very, very similar story to China if they are unable to get out from that. So that's something for us to think about. And also, if you worry about the management, you feel that it's not really worth the risk to take on the corporate governance issue with the business. Of course, I'm not saying that they have done anything wrong, and so far they haven't shown that they are outright taking advantage of minority shareholders, but they just have not truly explained some of the questionable move that they have done for the company, in particular raising and diluting the shareholders when there's no need to, right? Maybe they see something in the market, they want to prepare for it. Maybe they know that the banks are in trouble and might not be giving out loans for them in the future, and they just want to show up their balance sheet. I don't know, but they're not explaining it, right? So this is something that we maybe just have to trust them on it if you invest in them. And now, lastly, just understanding your circle of competence. If everything that I said here doesn't make sense to you, and the sports industry or the fashion industry or the consumer industry in China is not something that you are comfortable with, there's no reason, to force yourself to like this company if it makes you uneasy. Okay, so that's all I have to share for Leading an ANTA. Before I go into the next segment, if you guys have any question, do let me know. Let's have a chat here to see if you have any question for me. Hello. Yes. Testing. Can anyone try on the chat box, see if you have any question for me? Let me know where you're dialing in from. How's your Chinese New Year? Let me know. And are you planning on going on a holiday or to anywhere? Okay. While you think of some question you might want to talk about, feel free to put them onto the chat. In the meantime, I'll go to the next segment, which is talking about, where's my book? Which is, let me share the screen again. Okay, so I'll talk a little bit about our spin-off segment, which is sharing about this wonderful book that I'm reading right now, the book on Elon Musk by Walter Isaacson. And I have to say, this book has me pinned to my pinned to the book for the entire Chinese New Year. So the entire Chinese New Year, I was carrying around this book, and anytime I have a free time, I was just devouring this book, a 700-page book, but amazing insight into the man and into what it takes to really create what he had created, right? We can either be a fan of him or not. I was never really a fan of him, but after reading this book, I have to say that I came back with a sense of a true respect for what he has done. It is really beyond what any normal person could do. Taking on the risks, right? Like he himself is someone that Elon Musk is someone that is very attracted to risks, and the more you tell him that this thing is going to fail, the more he wants to do it. Basically, this sort of his character, and he don't mind taking on all this risks, right? He still feel it in the book. You see that, he experienced a moment of stress so much until he vomited. He has to go to be hospitalized, but it's something that he keep on going back to, right? He liked this risk, and when there's no risk, when things are good, it's actually when he feel uneasy, and he has to create some artificial crisis for himself to feel normal and to feel be in the zone, which I guess kinds of explain his erratic behavior sometimes, which is this side of him that needs to be always in crisis mode. And I find that extremely fascinating, and definitely, without his type of character, I think it's not that possible to create the kind of company that he has done, especially SpaceX, right? A private company that go to space. I don't think this is something that anyone would genuinely think is a good idea to do. And he did it when he was not extremely wealthy, right? In terms of he's not at the billionaire level. He basically take some of the proceed that he has from PayPal, a few $100 million, and started SpaceX. Unlike currently Richard Branson or Jeff Bezos, who are already multi-billionaires before they decide to venture into space. So it's quite an insightful read, and I just want to share with you guys. And I would like to give this as a free giveaway for February, for Chinese New Year as well. So all you have to do, I hope you can help me with that, is right now I'm trying my best to rebuild our premium club, and which has I would say has saw quite weak response, especially after COVID, when the market crashed and most people are become less interested in the stock market. And I have been busy with my family business, and I have neglected it a little bit. And I really hope that I can help rebuild it. And I need your help with that. And if you have enjoy what we have share what we have created for you guys, and the discussion that we generate, I hope you can share some takeaway on your own social media. Can be Facebook, can be Instagram, whichever is in particular to you. And I hope you share some takeaway of what you have learned from our premium club. What do you like about it? Give me a testimonial, and tag me, either my personal account, Stanley Lim PS, or the work account, which is Learn with Stanley. And so that I am alerted that you have give this testimony for me, and I hope you share it with your friends, and your family, if this is something that you feel that they should also be looking into, if they want to learn about investing, or they're trying to build up their portfolio, or just need some new ideas on running their investment. I hope you share the wonders of a Premium Club to them. And from that, at the end of this month, I'll also select one of you as the winner for this book free giveaway, and I'll send you guys the book in March. So our last month winner is actually one of our members from Singapore called Lawrence, and thank you to him. And I'll be sending him the book from last month back to him, The Atomic Habits. Okay, and that's all for this week. Thank you so much. If you have any question, you can feel free to share on the chat. If not, I'll see you in the next few weeks. Thank you very much. Happy Chinese New Year, and hope everybody. Thank you. See you guys.